Welcome to chartingwealth.com for Tuesday, the 19th of May, 2015. That is the 4-hour chart for IYY. That's what happened today, but how do we always start? We like to start with the 2-day chart. Here's our 2-day trend line. Now, for those of you who are joining us for the first time or just learning how to invest in the stock market, we are doing what's called technical analysis, and we start off always with IYY, which is the U.S. Total Market Index Fund. Why? This ETF, Exchange Traded Fund, tracks the total market. That's what we're looking at. We look at basically 3 indexes and gold. Why? Because indexes, we find over and over again, are much easier to track and follow than an individual stock. The reason is because they are baskets of stocks, and hopefully they are more chartable and trackable, and we can figure out when they're going up and when they're going down easier and more accurately than stocks. That's our hope and desire. So what do we see going on right now? We see over the last, this is a 2-day, each one of these candles is what we call, these candlesticks are 2-day candlesticks. So that's 6 days of up movement. You can see where the crossover occurred here around the 14th. And this is the derivative oscillator. When I say crossover, you see the blue crossing over the red. That is the MACD, moving average convergence divergence, crossing over the exponential moving average line. That is a trigger for us. When that blue line crosses over red, it means that we are looking for the index stock, if it was a stock you were tracking, commodity, if you were tracking a commodity. These rules apply in many different types of assets. But when that crosses over the blue over the red going up, we look to the charts to see upward movement. It is a statistical, it's a mathematical formula that shows us that. And we put it into a graphic presentation so we can actually see it and absorb it quickly. These light red lines in the background that you see, these boxes, they are the derivative oscillator. It's another oscillator just like the MACD that we use to give us some feelings and confirmation about what's going on. We can see that it is getting shorter from shorter red. It will eventually convert like over here over to green as it did between the 10th and the 14th. That should be happening if the index, the total market, continues to go up. So now we've got our 2-day trend line. Let's range back to our 4-hour chart and see what we see. Well, on our 4-hour chart, we can tell, here's our 2-day trend line, still showing on that chart. We're much higher, crossed over back on the 8th, and we still have an up movement on both the total market and on the 4-hour market. That way, the total market for the 2-day chart and the total market for the 4-hour or half-day chart. That is a good sign. That market or that index is going up. The total market's going up. Now, let's range back out to our 2-day chart, and let's go over to SPY. And by the way, IYY was up 0.46% today. SPY, which is the Standard & Poor's 500, that's a basket of 500 big stocks. It is also in an up move, crossed over back between the 12th and the 14th. Again, derivative oscillator. It looks very similar to what we saw in the IYY. That happens quite often. It did not go up quite as much as IYY, up 0.31% today. Again, this is a 2-day trend line, but we see very similar results here, crossed over going up. Now, let's range out on that one to the 4-hour chart. And we also have the 2-day trend line, and we see that it too, it didn't cross over. Well, it crossed over on the 8th and then went back and hit and crossed over again between the 13th and the 14th. Now, as a 4-hour chart, it represents half a day. So this is the morning candle for the 18th, and this is the afternoon candle for the 18th. You might say, why does it go from 15 to 18? Well, of course, the market's not open Saturday or Sunday, so we saw up movement on both candles today. What you saw happened on Friday was, of course, an up movement and then a down movement in the afternoon, up in the morning, down in the afternoon. We're still in an uptrend. Derivative oscillator was gaining. Everything is up on both the 2-day and the 4-hour chart. Now let's go back over, and we're going to go to my favorite index, the Qs. It's just my favorite one for trading. It's up 0.44%, not quite as much as the total market, but almost. And again, we don't have a good 3 candle trend line. We have a 2 candle trend line. It's getting us there. It did just cross over between the 14th and the 18th today. So we are seeing that crossover just now occurring. And we also see the derivative oscillator has not switched over to green, just like on the total market. Now let's switch back to the 4-hour chart and see what it tells us. The half day went up both segments today, both in the morning and in the afternoon. So all three of our indexes are up on the 4-hour and the 2-day charts. They both have crossovers. They have confirmed rises. They are all above, all three are above their 2-day trend lines. So that's where we stand on the indexes. Now let's go back out for the last thing we're going to look at. We always look at what? Gold. It's the only commodity that we look at. Gold is interesting. Here is gold again. We only have a 2-candle 2-day trend line. So just 4 days there. Again, we like to have 3 candles connecting. If you don't know anything about trend lines or how to draw them, talked about drawing them yesterday in our presentation, but we've got some great trainings that you can find at the website chartingwealth.com. You can also find them on our Twitter and Facebook pages, but good trainings on drawing trend lines. They're very valuable. We can see that gold crossed over going up back on the 25th. Then we saw this sideways slide, which is when the MACD, the moving average convergence divergence, our favorite indicator, does not work that well when you have sort of a side slide. It did, however, rebound when we saw the derivative oscillator flip over right here, as it did here. We saw a rebound over the last 4 days in gold going up pretty substantially. Now, let's see what gold did today. Well, moved up in the morning and down in the afternoon. Where is gold? Well, the derivative oscillator is losing some power. It looks like we're getting closer to a convergence, means it's not diverging, that is getting further apart. Converging means closer together. It could be topping off here. You can see that it's held that over the last 3 days or so. So it could be losing some steam. It could just be digesting those gains as far as gold goes. But as far as where gold is, crossed over going up on the 4-hour chart, way back on the 12th, it's continued to move up. And of course, on the 2-day chart, as we talked about before, it has been in an up move the whole time, even though the price doesn't show that. The derivative, the MACD shows that. Derivative oscillator showed it up until it flipped over on the 24th of April, but it has flipped back over on the 12th of May, or I guess the 14th of May. And gold also is on an uptrend on both the 2-day chart and the 4-hour chart. So everything that we're charting is on uptrends. Now, what do we say, though, about the month of May, June, July, August? When we get into the summer months, sell in May and go away. What does that mean? The big money typically leaves the market. The volume goes way down. And what's the difference between a bathtub and the splashes you make in it versus a large bay? Well, or a lake. The difference is you can't splash anywhere near the percentage of water out of the bay that you can out of a bathtub. Why? Volume. That means that smaller amounts of actions in the market can produce bigger effects when there's less money in the market. That's why it can get very choppy, sort of like what we see here. Not saying this is related to that, but that's what choppiness looks like on the gold. It's sort of up a little and down a little and up a little and down a little. We like nice, solid movements. Like if I go back to gold in January, there's a great crossover going up, and look at gold up. Here's another crossover going down, great movement down. We're not asking it to go in only the up direction. We're just wanting to be able to see when it's changing over so we know when to get out or to get in. That's what makes it difficult about sideways movement, and that's what you see in the market during the summertime because of less volume. Does that make sense? A lot of people cannot understand that. That's the one thing we love about sharing all this knowledge with those of you who listen, is helping you make common sense out of the market. Common sense. Thank you so much for listening. We hope that you have a great day trading on Tuesday, that you have a great week this week investing in the market. God bless. Good investing to you.